All right, welcome back. It is the 23rd of February 2020. We're going to go ahead and get into swings. I love to do this before the market opens. That way we can kind of test our analysis and see how we're going to do here, whether the market gaps down or gaps up. Nobody knows. The best thing we can do is come over here a few minutes beforehand. And I'll tell you, even when I do that, sometimes it's not really what you think is going to happen. So looking over here, you guys, I'm going to show you a little bit different setup. So typically I'm just showing you the screen in the past several weeks and just kind of got away from having all of this over here as a distraction during our live trading. But, you know, a lot of traders ask me, hey, John, how do you have this set up? And you all know that are in the library. I teach you how to set this up and show you some extremely good insight of making trading a little bit faster for those traders who are using a desktop. So anyways, I got my favorite over here. We have broad market analysis. We keep this in here as well. And I believe I updated the swings. We did with our swing trades that I put into the room right here. We'll go over those here in a second. This is my scanner. So we have scan trades over here that get me very quickly to charts that I like to see right away. And let's go up here. Then I have my current account that I always have as well. So if we open that, you can see I'm in Triple M and Chewy at the moment. And we will close this up. And then again, my favorites and your live news. I have this on here just because if I'm looking at a ticker, news is a catalyst that can push price into an edge. So I always want to know kind of what's going on just in case right before I take a trade. So let's get into the swing trades for this week, the 23rd of February. Intentions here are just for the week, and if things work out, then stay in the trade and we'll move stops up and so forth. Let's go ahead and click on the first one here, DE, and this looks like it's in alphabetical order. So that's how we'll kind of approach this. Let's look over here on, it looks like they had earnings, so just understand that. Looks like a good earnings. I don't get too much into fundamentals and so forth, but you can see here consolidation across the board, nice big gap up. Typically what you see into earnings on a big move like this is consolidation for 2 to 3 days. So you may get a pop here tomorrow, perhaps, and maybe sideways action. We'll keep our eye on DE. I'm more interested if we pop above this high. Okay, or if price can hold 23.6% of that move up. We're just going to use the line in the sand that came from Thursday. We're going to use that into the pivot high, and you can see here, as long as price is holding the 38.2 in that bullish channel, I'm interested in taking this. So what I mean is going into, whether it's tomorrow or the next day, let's just draw this out, as long as price is hanging within this channel, pre-market, and so forth, the easier trade, in my opinion, is going to be above on the breakout, or perhaps this sells off back into the 618 here, and we'll see if buyers can come in here and buy this up. Now, that's just from an intraday perspective. I want to show you that so you can understand what I'm looking on intraday and also versus the weekly. So let's go ahead and get into that. So the weekly, the chart that I put together here, you can see this. So just so you know, I have the MEs on here from the past. Let's go ahead and take some of those off so it doesn't look so darn busy. We're going to come over here to show only last period and say yes. Okay. All right. Make this a little bit cleaner. I apologize. So you can see here, this is the channel. Basically, I just put blue in that. It's just been hanging out here for about 4 years. And it did kind of break out for a second there on earnings. But it really, at the end of the day, this has been my frustration with Deere is if you're not catching it at the edges, like see here on the monthly, it did exactly what it was supposed to do. Came down into the monthly. Once it reclaimed and made that high, nice move up into the edges. It's just been kind of hanging out. All right, so we need that base above this block, so basically around 180, 170. But what I'm looking at is a possible buy the dip scenario here. I'm focused on the 9 EMA. If it can hold this 9 EMA in the accelerator, I may be interested in starting position here and adding over the YE and the ME, the yearly edge and the monthly edge. Now, if for some reason it doesn't dip down there and we hang and hold, sorry, I shouldn't say hang, hold above these levels, may be interested in taking, sorry, I'm not maybe interested, I will be interested in taking positions back into the ATH here, 181, and then looking for that breakout, 184, 192, and then that round number of 200. Again, the ME and the YE are support. If it breaks and then reclaims, I'm definitely interested. Okay, let's go here into our next name. And of course, if I take any of these, I'll be putting down what I'm looking for in options. Typically, if there's a wide spread, I'm looking at delta 30 to 40s, no more than that. If the spreads are pretty tight, I don't mind getting a little bit higher on the delta, but I do like 30s to 40s depending on how far we're going out on this, okay? Again, I like the round number of 200, so it may be a longer trade. Dollar Tree, let's go ahead and take a look at that. Now, what's going on here? It came into the ME. Again, some of these, you just got to look at it and go, man, the edges work so well, and the process worked. So if you took the higher high over the base, looking for the trade up into the edge, it did that. Now it's in the cloud, the EMA cloud. I like what I see here, though. If we can get above, okay, so front running this and taking this above the ME, and let me just draw that out for you really quick. Front running would be me taking it now and assuming that price is going to stay above the ME. And what I'm interested in here is if we can get past this level, this wick, we'll jump right here into my next target. Now this is a Fibonacci target, but notice that it is confluent with the next EMA. This looks like a lot of the trades, the ZM trade, Square, so many of the names that were doing the same thing, pullbacks from the edges, taking over edges, looking for the higher highs and moving up into our targets. Same thing. And of course, once we can get out of the cloud, we look for that break, basically to come right back up here into a higher time frame supply. So you're working your way up into this sell-off candle here that looks like it came from earnings. That's what I'm looking on Dollar Tree. Bigger target here, 96 to 98. Current price is 93. The risk here looks like only about $2, just less than that. So not too bad. Again, Delta 30 to Delta 40. Looking at Guild. Okay, want to check this out. Broke a TL here, some basic technical analysis. Came back, it flushed. I love that it flushed. Looks like it probably took out some stops. Now, the first thing is we want to look at characteristics of a trade. What I see here when I look across are some wicks, right? We see more wicks than I see full body candles, which tells me this is not necessarily the easiest trade. Be prepared to be wicked around, right? And so as long as it's holding the technicals, we need to take that into account. Now, for right now, the stop says 68.28 to 69.70. Depending on the delta that I look to buy on this, I may have a lot wider stop than $2. Okay, I may be shooting for something a little bit more out of the money and trying to capture this supply zone up here, which is right above that 75 level. So for example, if I come over here to trade and I get into Guild and we get over to, let's just say we're going to go out 54 days. It's about 75, 77. These are $1.17 by $1.45, Delta 25. Okay. Notice we do have some volume coming in here, even on the Delta 20s. Okay. And really, if we go back to the chart itself, this is giving us 54 days. This thing can really start moving once we get out of this congestion. So 75, the supply zone itself technically is 76 to about 80. So if we want to shoot between 76 and 80, right, 78, 77 and a half, again, that puts me right into this area here. I believe the Delta 20 is stretching it just a little bit, and I'd rather capture some delta. If you were to get to 80, of course, these would be in the money. So I'm more interested in the 75, 77 and a half if Guild wants to continue higher. Let's go back to the chart just really quick. If we pull back, so this is what confuses some traders. If we were to gap down, this play is still in play. So if we gap down, what I would expect to find at this stop is support. If we start to round out, I can start the trade here. Stops go underneath. If we hold value above here, make higher highs, add into the trade, and look to trade it into targets. Let's go into the next, Google. Okay. The reason why I picked this, basically it just came back to the ME. We're going to use the ME as a line in the sand. Now, I will tell you, depending on the sentiment of the market and depending on where we open up, if we get a big gap down, I want to use my targets as that line in the sand. So for some amazing reason, we don't have a gap up or a gap down, then we can use this ME as a line in the sand. But in this market, we're so used to gap up and gap downs. I want to use, if we gap down, I want to see if one of these targets is going to hold a support. If it doesn't, say we're teetering, say we just kind of open up down here at 1475 and we start to break underneath, I probably want to use, instead of using, way up here as a stop or this, I'm going to use this number here as a stop and look to trade this down into my next target, or when there's confluence with the 9 EMA, which may not get you all the way down to 1445. If for some reason we start to move up and the market looks like it wants to trend up, I can use the ME here as a stop and look to ride this up within the neutral until I'm happy with profits. J&J, strong name, even last week during the weak market. This wick right here looks like a flush low. Again, kind of like the Dollar Tree, I believe I showed you. Looks like it flushed out, stops, okay, and then went bid immediately at what we call the accelerator and the 9 EMA. Now looking at the trade itself, going across here, you can see mini tops. Okay, the standard deviation is pretty big. What do I mean by that? Well, just looking at pattern itself, you can see here when J&J decides to move, what does that look like? Okay, I'm just going to do this here just to give you a good idea from basically pivot lows to pivot highs. Okay, this looks a little out of standard deviation. However, notice that we pull back right here. All right, so this standard deviation into targets, this arrow itself looks like this arrow, looks like this arrow, looks like this arrow. There's a lot in common there. Okay, so if we're indeed going bid and we can get back above the ME, look for it to push into 151.82, 154.45, and then up to 157.20. J&J has been pretty strong in this market. Okay, bigger picture, let me just kind of back up here and show you that. That's what we got going on. Okay, it's a nice pull down into the bottom rail. Nice push up, you can see here along this green dotted line. That green dotted line is no secret. Let me go ahead and show you what those numbers are. So basically I broke it in thirds, 0.66 and 0.33. Basically what I'm saying is it was lower on the curve right here, and it can push up into higher of the curve around 157 to 161. On something like this on J&J, let's go over to trade and look what we're looking for here. So we're saying 155, 157. I'm really targeting the 17 April. Okay, and you can see here we're getting a lot of movement or volume into some of these positions. Now, that doesn't mean like it's necessarily bullish like right away. All right, so dip buyers are going to come in, they're going to test out the market, and what looks big to you and I is not really big to institutions or fat pockets, right? So the numbers don't mean anything to me. It just shows me a little bit of interest in something, okay? This is like going to a roulette table, somebody piling down a bunch of money on a number. It doesn't mean I have to put money on that number. Probabilities are still low, okay? So coming into J&J though, I want to look at targets. And so if I'm looking for 157 to this top 161 or so into this red line here, 157 to 161, you can come over here and you can look here, 155, 160. I like the 155s. All right, makes sense. It's between my targets. It's got a little bit of interest here, but I also notice we got some volume here and here. Somebody could be buying. This is speculation. Somebody could be buying here and selling here and not expecting a move over 155. But what do they know? I don't know what they know, right? So I'm just going to follow my analysis. I just want to show you those two numbers here. Now notice we have open interest on the put side as well. It's pretty high, but not too bad. Okay. Again, this is not a biased trade. It's if this, then that. And you can see we are at the ME. Again, we're going to use that as a line in the sand. Right now, it's 150.10 by 148.29. What does that mean? That means if we start to break down again, I'm not going to do anything with this trade if it's in this neutral box here. It's more interesting to the downside if it breaks what was resistance. They made it look like support, and then they break it down again to come back down into the YE, which is around 145. That's what I'd be targeting. So it gives you about $3 to the downside if you wait. Okay. Let's go over here to PHM, Pulte Group, Home Builder, right? I really like home builders. This thing's been on a tear. It's a nice base support. Trying that base support again. It could be a sideways trade, might be a candidate for iron condors. Again, we're going to use the ME though for a line in the sand going into this week. If it starts to break down and takes down this low, okay, and let me just zoom in so you can see a little bit better. If it could take out this low, probably coming back down here into T1, T2, which looks like it'd line up with the accelerator and the 9 EMA. Any kind of breakdown from there, folks, I love this demand zone down here at the YE, and you can see that price down here at 39.40. Again, these targets to downside 45.23, 44.05. Targets to the upside, what I want to use is actually this trend here. I'm going to use my Fibonacci extension. I'm going to come up to the high, double click there, and you can see we got ourselves a target here around 49.37, and I got a target here at 38.2. So on the long side, if I were interested in this trade, we're going to go over to trade. PHM, we can do 20 March, folks. All right, so monthly expirations don't have to go 54 days out. All right, again, make sure you understand the targets. Be looking at 49, current price at 46. I don't want to be on a momentum trade. I actually probably use this wick as a stop pretty tight. So about 45.70. Okay, 45.70, less than $1. So we're going to go over here again. Targets 49.22. Let's go right down into here. Gives you about 26 days. Okay, 49, 26 by 34. Little, Delta 20, not cool. 31, I like this one for this type of trade. 52 by 58 cents. Not too bad. Okay, on the downside, again, like I said, going back to the downside, if we start to break down and we want to use the ME as a short, I'm looking for a 45 by 44. Probably going to use the 45. 45, 69 by 73. Okay, and these are probably around a delta 30 as well. All right, and there it is. I apologize. So you can see delta 32. All right, let's go into charts one more time. Going to look at Snap. Okay, now Snap's interesting. Now I didn't change this blueprint. This is actually from a while ago, and it's doing exactly. I really like this because it's doing exactly what we thought. So you get that little cup here. That's the way I'm looking at it. You got this cup. Pullback is what I was expecting into the YE and the ME. What I'm interested is we have higher lows. Okay, maybe a small flush tomorrow if we gap down. I'm interested to see if we make lower lows. If we don't and we come back to reclaim this, I want to be looking to get long with the support of the ME and the YE. Looking to trade this back up into this ME at 1927. Snap is currently at 1670. This one, I'd probably want to buy a little bit more time. Okay, let's go in here. 26 days out, looking for 19. I wouldn't go that far out. Delta 30 again. I like this one. 33 by 34 cents. 18 calls. To the downside, let's see if there's any reward there. If we start to break down the low, I like this demand down here at 1510. It's at 1670. I'm not really into that. So I'm just going to leave this alone. If it starts to break down, then I should have an alert probably right in this area. Okay, into that demand. And I'd be interested in possibly getting long around this area. Targets again, 1927, breakout from there, 21, 23. Overall look, this is what we're looking at, okay? If you want to come around, all-time high into the pivot low, check out where we stopped, 618, okay, 618. This is the biggest level here. Matter of fact, I could move this 1927 up to 1994, but let's just be careful. We're going to leave it here at the ME. Once it breaks out from there, I'd expect it to come back and check the 618, moves into the imposter, 76.4, and then back down to the 618. They did have earnings already, looks like, on 2/4/20, so we do have a lot of time in this stock. Momentum is green, okay, and on the weekly, you can see here, it's kind of just stuck right underneath the 9. We need to recapture the 9, look for these to be support. I like this trade to the upside. If it breaks down, I'm just going to let it break down. I feel as if we could find support in this cluster of demand here. Overall, that's 1, 2, 3, 4, 5, 6, 7. Is that right? Yes, 7 trades. Okay, and let's go over here and just make sure I didn't miss anything on the swing trades. I want to make sure I have them all. Yeah, looks like we have 7 over there as well. But before I forget, let's go back over DE and Dollar Tree, and let's actually look at the options themselves. Okay, again, folks, bull market, but this is consolidation for quite some time now. I like the round number of 200 if the market gets going again. If we can get a pullback and then we get a buy the dip scenario, I think DE can really take off. I got targets for now, 184 by 192. Again, I like the round number of 200. I'm going to actually go out here, okay, and look at, this one looks just a tad bit different. I apologize. Let's just look at 20 March for right now. Okay, we got a little bit of volume here on the 190s, which comes into, again, my target here. Between 184 and 192, I personally like probably 185, but let's look at the delta. 185s, delta 26 is perfect for me. Okay, 166 by 180, not too bad of a spread. Gives me a little time, and it's 26 delta, which means if it goes against me, this is not including theta, is roughly $26 loss on every contract for every dollar that DE drops. It was up 11 bucks. Remember, consolidation most likely not the easiest trade for the first several days. It might bounce around a little. Could also just wait to see if it's going to break above the high. To get started on the trade though, I could go smaller and then add as we break this trade. Add on a dip. Sorry, initiate the trade on a dip, add above the highs, looking for that 185 to 190. Dollar Tree, again, this trade itself targets 96 to 102. Let's get in here really quick. These are a little bit more expensive. Okay, I'd be looking at 95 and 100s. Again, delta 30 here, $1.80 by $1.95. Not too bad. But again, going back over here, let's look at the ATR, 4 bucks on the day. So if we're wrong, it could be down $120 roughly per contract if we're going the wrong direction. Now the stop is a little bit tighter than that. It's less than 2 bucks. So the risk as of right now would just be about 65 bucks or so. On a momentum play, the stop is a little bit different. So what do I mean by momentum? Let's say the market doesn't gap down. Let's say that it just kind of stays flat, dips right into the neutral, and then right back up. I take the trade. This is momentum. It says having a stop here. If we get close to our T1, we're actually going to bring the stop just right underneath the neutral top line or at the top. And then as we move higher above here, the stop then gets, and we move it underneath target 1 or the base, whatever's there. And I would show that on an update. Okay, so that's what we're looking for going into this week. I really appreciate you guys taking the time to look at these with me. And just so you know, the market's going to open up here in about 40 minutes. And if we have some huge gap down, of course, these could be changed before tomorrow. And I would just work on them Monday after market close and just look for some more setups and so forth. Okay. But I'd love to put this stuff out here so we can at least see how the market's going to react in a case that we were to gap down or gap up. And so we will keep this for right now. And if you have any questions, please reach out to me. I really appreciate you, and we'll see you in the morning.